More than 9% of all homeowners in the United States have fallen behind on their mortgage payments, and many of them are facing foreclosure. It's just one of several highlights in today's second quarter mortgage delinquency report released by the Mortgage Bankers Association. The rate of new foreclosures was little changed at 1.36%, but prime loans, not subprime loans, were the driving force. Prime fixed-rate mortgages now account for 1 in 3 new foreclosures compared to 1 in 5 a year ago. Joining us now with more is Brinkman. He's the chief economist at the Mortgage Bankers Association. Mr. Brinkman joining us from our bureau in Washington. Mr. Brinkman, welcome to Bloomberg News.
Thank you. Thank you for having me.
Sir, these numbers, especially the prime numbers, are rather startling, aren't they?
They are, but we've been seeing this trend over the last 2 or 3 quarters, perhaps. What was surprising out of this was the large drop in the subprime ARM foreclosure rate. And it was across the board. We had about 43 states in the country that saw a decline in the foreclosures on subprime ARMs that have been leading the problem. The flip side, 41 states had increases in the prime fixed foreclosure problem. So that's where the economy is having its effect across the country.
What is the key economic fundamental driving these trends in mortgages, delinquencies, and foreclosures, whatnot?
It's jobs. Jobs combined with severe price declines in certain states, that even though the problem is across a number of states, we still see a tremendous concentration in states like Florida, like California, and elsewhere, that they represent still about 44% of all the foreclosures in the country. They also represent almost 40% of the foreclosures in the prime fixed rate market, whereas they had been leading with subprime ARMs. So Florida is a major issue. 12% of the mortgages there are already in foreclosure, and about 23% of the mortgages in Florida are at least one payment behind. So
right.
Florida has some severe problems and is driving the national numbers.
Mr. Brinkman, you mentioned the jobless rate. What's your forecast for unemployment?
We see unemployment peaking middle of next year. There are obviously some threats to that forecast. If we don't see consumer spending come up, we could see another dip. But we're still pretty confident that we'll see unemployment peak middle of the year. Delinquencies will probably peak at about the same time. Foreclosures always lag. Foreclosures may be out toward the end of next year before we see a final peak.
Is it encouraging all that foreclosures are flat versus this record number of delinquencies last month?
I wouldn't read too much in the fact that the foreclosure numbers are flat, because recall it's flat relative to an all-time high. Also, I think it was held down a little bit by a moratorium essentially was put in place in Illinois that held down the number a little bit. I think it's the shift out of subprime that perhaps is a little encouraging, because we know how to deal with the prime problem. That's a jobs-related issue. Going forward, I think we'll just have to see what parts of the country recover first as to how quickly we get out of this.
Mr. Brinkman, where are we seeing the most pain?
The most pain is clearly Florida, Nevada, California. We still see a lot of problems in the upper Midwest, Michigan and Ohio, but there are growing problems in the Carolinas. North Carolina, South Carolina, Georgia are also stepping up with significant increases.
And Jay, mortgage rates fell to 5.12%. Is that going to improve the refinancing picture? Could that be an improvement to drop the number of delinquencies?
I don't know how much it's going to drive delinquencies, but it's always a help for the economy. If you allow somebody to refinance a mortgage and save a few $100s a month, one hopes that money then gets spent back into the economy and we get consumer spending coming back up. But in order to refinance, you've got to have pretty good credit. And being delinquent on a mortgage is not going to help you qualify for a refi.
Mr. Brinkman, what about the Commerce Department reporting also this week about the single-family homes, the starts for the single-family homes? Is that an encouraging sign?
It's an encouraging sign as opposed to a further drop, but keep in mind that is coming off just extremely low numbers, and the amount of the increase is actually pretty low.
Right.
We're seeing that in just certain spotty areas. We've got such tremendous inventory overhang in some of the worst states that you're not going to be seeing any construction there.
Jay Brinkman, the chief economist at the Mortgage Bankers Association, joining us from Washington. Mr. Brinkman, thanks.